sense that this issue could snowball into something major, or once again, is this going to be a bit of a buying opportunity?
Sorry, what issue is that?
The North Korea, launching the missile and the geopolitical risk emanating out of that.
Well, I don't think that there are many new options that the U.S. has, so I don't think there's much can be done in the short term. And these kind of things generally don't tend to have more than a fleeting impact on stock markets, so that wouldn't be my top concern for global equities right now.
Geoff, morning. Is there any other concern, or do you think this big global rally that we've seen, that's just going to continue after this brief pause?
Well, we're at the halfway point, and I think the macro backdrop for risk assets is still generally supportive. But on the other hand, valuations don't leave much margin for error. And I think the worry now is, have investors' returns been front-loaded? So that is basically the situation facing investors. I think some who have really done very well in the first half might actually be advised to take some risk off the table, because I think there could be some good opportunities coming up, particularly with the weak summer months where the seasonality is at its most adverse for the S&P 500.
Yes, the returns have been solid in the first half of the year, 18% for the MSCI Emerging Market Index. We just heard Adrian Morvad of JP Morgan, and he was saying how the emerging markets have outperformed the developed markets by nearly 8%, and this was the best first half-year performance by the emerging market since 2009. In the second half of the year, what are you penciling in?
Well, we are keeping with the theme. We think it's justified to remain overweight non-U.S. equities, so we have a preference for Europe and for Asian equities. I think the interesting thing with the emerging markets is this could be a long-term inflection point, and there are positives which justify going back to the emerging markets, which aren't going to disappear overnight. So I think even if we see some corrections, some give back in the near term, on a 12 to 18 month view, we are positive towards the emerging market debt and equity classes, actually.
Geoff, I was reading some comments that you made in June, and you were fairly optimistic on the prospects of an earnings turnaround in India back then. Now we're going through the motions with the GST rollout. What's your current view, and what's your call on the Indian market?
Well, I think the investors are still happy with the progress that the Modi government is making in terms of the policy reforms. The macroeconomy looks pretty robust. Inflation's coming down. We could actually have an extra cut in interest rates. So the thing which everybody puzzles about is earnings, which have disappointed time and time again over the last few years. So that's where the big risk is, I think. And we'll be looking at the results very closely.
Okay. Finally then, Geoff, you said you are positive on emerging market. Where would India be in the pecking order now?
Well, at Manulife Asset Management, our fund managers tend to be very much at the bottom-up stock-picking end of the spectrum. And I think India's valuations weigh against it a little bit, so we're broadly neutral at the moment.
Okay, Geoff, thank you very much for joining in. So right now, he's not too worried about the geopolitical risks escalating from here on. Remember, there is going to be that emergency United Nations Security Council meeting, which will be held today to discuss the recent developments about North Korea launching that intercontinental ballistic missile.